Lisbeth, first week. I seen you in a couple calls, Lisbeth. You active. I like it. I like it. You active. So I already know you in it. You in it to win it. Practicing on your demo. Excellent. Soon you'll get very comfortable and it's gonna be showtime for sure. First week also, Victor. Okay, perfect. So for Victor and Lisbeth, did y'all already create your Market Pro? Let me know if you already created your Market Pro. Just put yes or no. For Victor, did you create your Market Pro? All right, so this is the first stop for all my people. This is no ifs, ands, or buts. Right here, you just log into your back office, Victor. You log into your back office, iGenius. You go to My Products, then you go to Education, and right here it says Market Pro. This is where you're going to start to learn the basics. All right, you're going to learn the language, the foundation. All right, so before you can have a big, strong, tall building, you got to have a strong foundation. So this is where you're going to start. All right, so I want you to click on this. You can even do it now whenever you get a chance. Market Pro is going to prompt you to create your username info. Once you create it, once you click on it, it's going to ask you to enter those details. And then you're going to log in. This is what it's going to look like, Victor. So these first three sections, this is what I want you guys to do. All the new members, this is where you're going to learn the language, like I said. So I'm just going to give you a quick glimpse of the first one, only the first one, Trading Essentials. So you click on it, everything should be 0%. This is where you're going to learn what is Forex. And this is a perfect tool we could utilize to show family and friends. They don't know what the hell you're talking about when you say Forex. All right, come here. You got 10 minutes? Let's take a look. And then you can educate them. What is Forex? This video breaks down what is Forex. Pips, points is how we make our money. The movement of price is your pips, right? Bull market, bear market, your lot size. This is how it's going to determine how much one pip is worth, your lot size, all right? Short and long position, your stop loss and take profit. Stop loss simply means your safety net. Your take profit is just your finish line, all right? Scroll down here, trading emotionally, super important. Averaging down, not following a plan. You got to always have a plan. So this is the first section, what it looks like. I'm driving, but paying attention. I'm also learning. All right, drive safely, drive safely. This is being recorded, so I'm going to drop the recording. Don't worry about it. All right, so trading essentials. That's the first one. I want you to do technical trading and strategic trading. And then from there, you could check out the rest of the Market Pro. It's jam-packed with a lot of valuable information, all right? So let's get right into it. How's everybody's trading week? That's what I want to know. Drop some fire in the chat or drop a 5. Drop a 5 in the chat if you had a very successful trading week. You had a good trading week, drop some 5. If you took some trades, make some money, drop some 5. If you didn't, you know I got to find out why you didn't take any trades. Nobody took some trades and made some money? So Rob took some trades, made some money, Rob. I don't care if it's $10, $20. That's $20 more on your account. All right, still in demo, but got my first couple wins today. Okay, that's a trade. You took some trades. Miranda, you good. You took some trades. We all start in demo until we get comfortable and we understand what we're doing. Then you move it up to your live account. All right, so everybody starts demo until they get comfortable. All right, so Teresa, Levon, demo $80. Yes, that's what I'm talking about. I love it, Victor. I made some mistakes, but I know where I went wrong. Learning lessons and moving forward. Exactly. That's why we utilize these demo accounts, so we can make these mistakes and we're not going to make them moving forward. I was up, then I went and traded Nas and didn't adjust my price. Oof. But see, it's all good. Dallas, was that on your demo or was that on your real account, Dallas? Same with Maritza. Okay. Love it, love it, love it. Real. All right. So, you know, we take that lesson, we bounce back. That's all. We take that lesson, we bounce back. So Fridays, I'm just going to do a review. I love doing reviews, how the previous week was. If anybody had any issues, whether it's how to enter the trades, because we still have new members coming in on these calls. If you have a problem how to enter the trades, if you don't understand what the movement of the stop loss is, or the stop loss, you got to wait for the 4-hour closure of the candle. If you have these kind of questions, this is a call that you jump on and you ask these questions and I help you. But what we're going to do, we're going to review. We're going to review, family. So first thing we're going to go to is the charts DXY. So what is the DXY? DXY is simply the dollar index. dollar index, still adjusting to moving the stop loss. So all that is on your MT4, you press and hold the trade, and then you go to modify, Rob. Once you go to modify, let's say you up 30 pips, you just move your stop loss to entry, for example. You just move it up to your entry because you're in profit 30 pips. All right, does that make sense, Rob? Is there any recording or video on how to use the MT4 on the computer? I don't have a recording. No, I don't have a recording, but I'm pretty sure I could find a recording to show you how to set that up. Is that break even? Yes. If you put your stop loss to your entry, that is break even. All right. So if price comes back around, shoots back down and knock you out, you just leave with zero, break even. Yep. All right. So this is a DXY. This is your dollar index. That's where I messed up last night. All good, you know. So, you know, just a valuable, not a valuable lesson, but, you know, it's a lesson that you're going to take. And then now you know how to do it. Now you good. So you good. So your dollar index, this is your dollar index. This is just how the dollar is moving. Why is this important? Because we are able to utilize the movement of the dollar index with association with different pairs. So for example, anything with USD, if we're doing USD JPY, if the dollar index is going up, USD JPY will also go up. Reason being is when we talk about USD JPY, let me write this, type this so y'all can see this. USD JPY. What currency is first? Yeah, tell me in the chat. What currency is first? In this pair. USD. There we go. USD first. Right? So if the dollar index is the US dollar, if that is going up and USD is the first currency, the USD, this pair will often go up. 99% of the time, it's going to go up. Sometimes it might consolidate because if the Japanese yen is also strong and going up, and they're both going up, that's where you might see some consolidation. All right. But if the USD is going up and let's say the Japanese yen is going down, then you'll see a major push in the USD JPY pair. Does that make sense? Drop a 6 in the chat if that makes sense. All right, perfect. So now we know USD pairs are affected by the movement of the DXY. So let's say now, for example, Euro USD. If the DXY is shooting up, Euro USD, we expect that to do what? Go up or go down? Down, okay? So when the second currency, the USD is second in this pair, if it's going up, this pair will go down, all right? So remember, if it's the first currency is going up, it will go up. If it's the second currency in the pair and it's shooting up like this, often this pair will go down, all right? So this is how we correlate the strength of these indexes and we use it to our advantage. Also now gold, if USD is going up, gold is going down, all right? These are the primary pairs and gold, for example, that we utilize the index to know how to jump into and when to jump out of trades, okay? So let's look at this real quick. Dollar index, we on the week. We start on the week. We notice a big push. During this big push right here for the week, gold was dropping, all right? Gold was going down, all right? When it's starting to correct itself a bit, going down, this is when we see that big jump in gold and went up to like 2070 because the dollar index was going the opposite way, all right? So on the week right now, we're seeing this in a downtrend, all right? I want y'all to see this clear. It's still in a downtrend, all right? Boom. So right here, it's at a level right here, very important level, right? Either it's going to tap it like right here, and when the market opens back up for the next 7 days, the next week, this closes in 45 minutes. This week is complete. So the next week is going to be very crucial to see what happens. If this is going to bounce off and drop and create a new low, the new low will be right here. It'd be look something like this. Boom. It has to break this. It has to break this to create a new low and continue this downward trend. All right. So this is market structure when we're talking about market structure. It has to come here and break this low and create a new low to continue this downward trend. Very important to know. If price comes here, bounces. 1 second, y'all. My baby's at the door knocking. 1 second. I'm back. If y'all know me, y'all know I got twin girls. So they're the stars of the show usually. All right. So that's scenario one. Scenario two could come here. That's scenario one. Scenario two is boom, breaks it, right? If it breaks it here now, this is where we have our change of character and break of structure. Breaks it, boom, waiting for that retest, boom, market structure, y'all. This is market structure 101 right here. All right. Let me mute everybody. All right, everybody sees this. Does this make sense? Does everybody understand market structure? All right, perfect. So this is all it is. This is all it is. And this was for the week. From here, we go to our day. All right, let's go down to the day from here. Just look at it real quick. And I'm going to remove all of these. So we had our week. Now we had our day. There's more candles. We can see clearly where price is. Broke the low here. Created a new low. Boom. Shooting up here. Need to bounce and create a new low here. Let's go to the 4 hour. I want to see something on the 4 hour. And I don't really mark up order blocks too much on the day on the DXY. I just want to see how price is moving for the most part, right? So somebody look at this right here. They're looking at on the 4 hour like, oh, it's in an uptrend, right? And they're correct. It's in an uptrend, a correction on this time frame. But as you see, this is why the top-down analysis is so important. On the higher time frame, it's still considered a downtrend until it creates a new higher high. Does that make sense? The lower time frame right here, you can see, oh, it's in an uptrend, but overall, it's still in a downtrend overall. All right. All right, perfect. All right, so let's go into some stuff. Let's go to gold real quick. Let's go gold. Let's look at gold. Let's look at gold. Let's look at gold. All right, perfect. Get this out of the way. Y'all can see, yep, y'all should be good. So for gold, right, when I mark up, me personally, start at the higher time frames. All right, so we're now week. And this is what I want y'all to practice, and I got homework for y'all over the weekend. I want y'all to back test, mark these stuff up. You know, we're going to do market structure. We're going to do order blocks. We're going to do your support resistance and your imbalance. Those are the 4 things we're going to go over today. All right. So looking at this right here, what is an order block? For y'all, if y'all don't know what an order block is, it's simply this. Opposing candle, which is the selling candle right here. And then what we see next is a big impulse move, right? Big impulse push. Boom. This is your order block. This is considered order block. How do you mark that up? Get your rectangle tool. Body from here all the way down here. All right. This is stuff you could practice. I'm going to have weak OB, labeled it. Very simple. This is your order block. Opposing candle, big impulse push. Right? This is on the week. Okay. Let's take a look at this. I'm just going to mark up 2 areas for gold real quick. Opposing candle. Why are order blocks important? What do they signify? All right, so order blocks are important because it's showing that price moved very fast from this area, right? So these are your institutions making sales or buys from this area and pushing price very rapidly. When that happens, price normally trades back down into the zone that it left very quickly. It trades back down into the zone to balance itself out. So right here in a week, look how price shot up so quick. Boom. This is your institutions going for a big major buys right here at this area. Major buys shot up like crazy. Right? Went up here, and then look how it's working its way back down, working its way back down. It came up here so fast in 3 candles, which is 3 weeks. It came up here. All right. And it's working its way back down, working its way back down. So this is areas that we're going to be looking for price to come back. And we have team leaders that push out trade ideas. One of them is called Mo. So when you see Mo, his name is Smart Money Mo. When he pushes out his trade ideas, it's purely off order blocks. All right. Purely off order blocks. When you see Mr. Wins and Wisdom, which is Brandon, when he pushes out his trade ideas, it's off order blocks and market structure. All right. So super important. Why or order explain opposing candles? All right, please explain opposing candles. Opposing candles is just the opposite candle right here. This is a sell candle. All right. This is a sell candle. The black is my sell candle. The blues are my buy candles. So right here is my sell candle. This was the last sell, and then major buying pressure right here, pushed up until price exerted itself and had a reversal, and it's coming back down, pushing back down. All right. So that's all that is. Oh, so whenever we have order blocks, we can expect the price to come back down to the beginning of the order block. It's not 100%. This could take, let's say we have this zone right here and it takes a year to come back. And then when it finally comes back a year later, it reacts to this order block that it left 1 year prior and shoots back up. All right. So just having your order blocks is having your points of interest where you're looking for a reaction. All right. So when price comes to your order block zones, this is where we're looking for our reversal candles to enter trades if you trade that way. Okay. All right. So we have this right here. Boom. Let's go to our day. I'm only marking up these two zones. I'm only marking up these 2 zones real quick. So what we're doing right now, we're making our order block zone smaller. We went from our week to our day. All right. That's all we did. Week to our day. All right. So in our day zone right now, this is our previous week zone. We're in the day time frame. I'm looking at order blocks within the week zone. All right. What do I mean by that? We're making our order block zone smaller. Opposing candle, impulse move. All right. Opposing candle, impulse move right here. All I did was make this zone smaller. That's all I did. I went from, I'll go back real quick. I went from here, 1987 to 1953. So that is, how many pips that is? That's like 300 and, let's say 304 pips. 304 pips was this zone in a week. And all I did was make it smaller. So now I have a smaller zone from 1973 to 1959, which is 140 pips. So that's the big difference. I just made this smaller from 3 something to 140 pips. All right. This is on my day time frame. Day time frame. This was the week zone. Now I turn it to the daily zone for my order block. Same concept here. I'll look for the same concept right here. All right. And I'm gonna use this as a perfect example. This is what it was before. I'm gonna mic up another order block on the day. So this order block right here, opposing candle. All right, opposing candle, and then we had to push, boom, and then price came back, traded right back into the zone. Opposing candle right here, opposing candle. We had this impulse push. This is the day time frame, so we had a push, boom, and then price came right back into the zone, right back into the zone, and then we had that reaction. All right. This is a perfect example of utilizing these order blocks to jump into trades. All right. Now we got that. We got that. We got our week to our day. All right. Week to our day. Week to our day. We're in the day time frame right now. You'll still find these order blocks now within the push. So we got an impulse push pushing up. Pushing up. And what is this, family? Y'all see this? Opposing candle. Impulse. This is called RBR. What does RBR stand for? Anybody could tell me in the chat. RBR. Who's been on these classes? Let me know, family. RBR. What does that stand for? Rally-based rally. So y'all been on these sessions. I love it. All right. Rally-based rally. So within the momentum of price shooting up, we had a rally. This is the base because this is on the 1 hour. We only see 3 candles, but we go down to the 4 hour, we'll see more candles. Rally, base, even put it down here. Rally, base, rally. And this is the order block in the middle. All right. What do we see? Can't make this up, family. This is the power of identifying these order blocks. What do you see? Price shot came right back down where? I'm not doing nothing special. All I'm doing is identifying these certain zones where price could have a reaction. All right. That's all I'm doing. Rally, base, rally. Came right back down. And if you know my favorite reversal patterns, you've been on my calls, we have morning stars and evening stars, right? So this will be a morning star pattern right here. So once you learn your candlestick pattern, this is where it becomes super important to understand what these candles are telling you. All right. We had a push down, 1, 2, 3. Doji, buyers came into play. We're looking for this buy. All right. We're looking for this buy. The candlestick is telling us. On top of that, y'all see this? Let me know if y'all see this on top of that. What do we see here? What's this, family? Sheesh. All right. So in the daily time frame, we're able to find the zone. And now you could even simplify it a little bit more. Let's go to the 4 hour. All right. So on the 4 hour now, you see how you can see more candles. So rally, this is the base. And then this is another little big impulse push right here. Rally, base, rally, right? Y'all stay with me. I'm going to show you something. Stay with me. So on the 4 hour, let's simplify this a little bit more on the 4 hour. So we have the opposing candle right here. We're on the 4 hour now. This is at the bottom. This is how you tighten up your zone even more. You tighten up your zone, all right? Because you don't want to have these big zones with 100 and something pips from front end to your back end. You want to tighten it up as much as possible. So from here, this makes sense, family? Let me get the chat out the way so I can see. How many pips is this? All right, so we just created a zone right now from 813 to 811. 813 to 811. I think that's like the zone. Didn't Alex call out that zone? If I'm not mistaken, did Alex call out 813 to 811? Maybe he did, maybe he didn't. But now I just made this a lot smaller right now. I just made this a lot smaller, the zone. And now I just wait for price to come down there and have a reaction, all right? And have a reaction. Let's go up here now. This is our day zone. This is our day. Let's make it a little smaller. Where do we see it? We see the opposing candle right here. Then we got this big push. Look at this big push. It's like 4 times this candle, right? So all I'm going to do is do this. I like to do from body to the wick. From the body down to the wick. The wick is showing the lowest price went. Boom. So we got to respect it. The wick is showing the lowest price went. All right. So now let's take a look. All right. So instead of having that big zone, I just made it smaller from $8.99 to $8.86, which is still a big zone. We could go to the 1 hour. Let's go to the 1 hour, family. So what you learn is with order blocks, you could simplify it down to the 1 hour, and you just make, if this style is more comfortable and you able to like be more patient because you created a zone, which is super important. You want to have a zone where you could be patient and you're not just looking at the charts and jumping into trade like, oh, I see something, let me just jump into a trade. It's just about being patient now, creating your zone and being patient. All right. Creating your zones and being patient, family. Now from here, it hit the front end of the zone. It hit the front end of the zone. Then it came back and played where? When it came back the next time, it played the back end of the zone. All right. And this is just from us having our order blocks, family. That's all we're doing. Nothing spectacular. We're just creating a zone and we're being patient. Right here is called a what? When we got 3 hits like this, what is this called? So we have 1 hit right here. This is the back end of the zone. We got a second hit. And then we got like a 3rd hit right here, all at the same point. What is that called? Anybody know? It's a triple bottom. There we go. Triple bottom pattern. So we got new people. I love to pull it up on the chart so you guys could see it. All right. So this is what a triple bottom pattern is going to look like, family. All right. We're going to have 1, 2, 3. So when we have more hits like this, this zone becomes a lot stronger. Think of it like somebody walking around Brooklyn, New York, knowing they don't belong in these neighborhoods. Every time you come around this neighborhood, he's going to turn around like, I know I don't belong here. I know I don't belong here. The last time he come, he said, you know what, let me turn around and go back where I belong, and goes back. So triple bottom, I want y'all to identify these things right here in the charts. Once you can see this, you want to prepare yourself like, okay, it hit 3 times. You know what? Let me prepare myself for a nice buy. All right. Some people would trade, you know, the buys and sells, especially if they see it consolidating like this, they'll trade the buy and the sell. So I want you to see what it looks like. These are different examples what it looks like. Oh, so that means it becomes a strong support line. Yeah, that's the way to look at it. Yep. Yep, there you go. Strong support line. All right. So you see the hits 1, 2, 3. All right, this thing's going to take off. Right now, what the market is doing is just exhausted itself and it's taking a break. Think of it that way. The market is taking a break and catching its breath right now before the next move. And we're able to catch it. Triple bottom, we're able to catch it, take that thing, and we're gone. All right. So I'm just going to show you a couple examples what it looks like, family. Couple examples. All right. So I want y'all to start utilizing y'all tools. Use this. All right. We had a boom, boom. And it came back again on the 1 hour and we're able to catch it. All right. Let's go down to 30 minutes. I want to see this area on the 30 minutes. Top down analysis, 30 minutes. Right? 30 minutes. So first bottom, second bottom, the third bottom. Price, look at it. Price shot up real quick, got yanked right back down. And we're able to catch this what right here? This is the bullish engulfing candle. Remember, I told you these candles going to give us a story, right? I told y'all it's going to tell us a story. It came back down for the 3rd time. And we got a nice bullish engulfing candle. Everybody know what a bullish engulfing candle means? Let me know if everybody knows a bullish engulfing candle. Like I said, I know we got new members, people joining for the first time. bullish engulfing candle is just a buy opportunity, family, especially when it's coming down. When price is coming down, you catch this bullish engulfing, this is a great opportunity to jump in a trade. All right, you wait for it to close, and the bullish engulfing is only these two candles we're utilizing. This last push right here, price is coming down. This was the last push, and then the next candle was a nice big buying candle. This is the bullish engulfing. All right, we wait for price to close, and this is where we want to look to enter the trade. If you're waiting for candlestick confirmation, boom, once price close, you enter in the trade here. Your stop loss is going to be below here somewhere, right below this wick. This is your stop loss. And this is something you utilize for pretty much all your pairs. You could utilize this concept. Once you see your bullish engulfing, your morning star, evening star, your W's, your head and shoulders, whatever patterns or reversals you love to wait for, once it's completed, this is where you jump in the trade once the candle closes, and your stop loss is always going to be below the previous low, which is this wick. Stop loss is always going to be below here. All right. So from here, we enter the trade. It shot up. All right. Shot up. Came, retested real quick. Boom. One thing I want y'all to see is when we're talking about market structure now, it's going to be the break and the retest. Break and the retest. Break and the retest. We're going to see this over and over. We're going to jump into this. All right. So from here, we always want to break the previous high. All right. So this is going to be the previous high right here. Previous high. It's dancing. Boom. We need to break this. It got broken right here. All right. Yeah. See how this got broken right here? This is where it got broken. Boom. Broke it. This is the high. This is the low. High, low. All right. Y'all with me? Drop an 8 in the chat if y'all with me. Make sure y'all ain't falling asleep. Drop an 8 in the chat if y'all with me. All right. So we got the high here and we got the low. Price broke it, came back, quick little retest into our zone. All right. It didn't break this low. This is the low. If price broke this low and closed below, then you can't say, okay, this is not in an uptrend. This is going to continue a downtrend because it created a new low, but it didn't. So we got our low here and we got the higher low. We got the low. Let me erase some of this now. We got a low. We got a higher low. All right. Low, higher low. Once you start seeing the higher lows being created, that is your sign of an uptrend. High, low, high, higher high. So we got a high and we got a higher high now. It created a new higher high. Boom. Price broke it now. You got to break it. For to continue in the uptrend, it has to break. Boom. You got to break and close above. All right. It has to break and close above, family. So now we're going to put everything together now, right? Stay with me. We got the high. This was the first high. Low, higher, higher low. It broke it right here. See, broke and closed above. Broke and closed above. Came back down and retested. This was the retest right here. It always got a retest. Retest. Then what we have right here, family, on the retest. So when Alex trades and he waits for the break and the retest. So this is the break. This is the retest. And what's this on the retest? On this zone right here. What is this? Somebody tell me in the chat. These two candles, what is that considered? There we go, Mac. Talk to him, Mac. Let him know. Bearish engulfing. There we go. This is the opportunity for what? What opportunity is this for now? Exactly. This is our buy opportunity. This is a clear sign like, yep, buy opportunity right here. It closed above, came back, retest, boom, buy opportunity. And look where it shot to. All right, look where it shot to. Remember I said break in the retest, right? Break in the retest. All right. So this high, low, this was the new high because this high is above the previous. Let me show you. right? This high is above. We're all doing the body, not the wicks, the body. So you got to close above the body, all right? So let's see, the body is right here. High, low, high, right here, and then low. Boom. Then it broke. Then it broke, right? Broke it, shot. It's up here dancing, boom, boom. Look at the retest down here. Eventually comes back and retest, right? Boom. Kisses it and shoots off. But now look at this. Y'all looking to the left. What y'all see to the left? What is this? We just gonna put things together now. Now we putting together a puzzle. What is this? What is that, family? Let me know what that is. It's an order block. It's a bullish order block. Bullish order block. So what you're going to often see is when prices consolidate and move into the side like this, and then you see a big movement, 9 times out of 10, there will be an order block in this area where you see that burst. It's going to consolidate. Remember, when it consolidates, what market is doing? Market is catching its breath. It's catching its breath, getting ready for the next move. Boom, this was the next move. All right. Then it danced up here a little bit, sideways movement, and it came back where? Came back right here to balance itself out. Let me balance myself out real quick. I moved too fast right here. Right here, I moved too fast. We made some money. Let me come back, balance myself out, and then look what direction it's back heading. All right. So this is the power of your order blocks, family. The power of your order blocks. All right. Drop a 9 in the chat. Drop some 9s in the chat if this makes sense a bit. If you've seen it, it makes sense because we're putting different things together. We have our order blocks. We have market structure. We have the break and the retest. So it's not like we're just looking at order blocks. We're looking at break, like I showed you, the break and the retest. Not only the break and the retest, but now we have an order block in that same zone. So now we're creating what is called a confluence. Confluence just means multiple confirmation at a certain point. All right. If you only got one confirmation you're going by, and somebody over there got 5 confirmations, whose trade idea is stronger? That makes sense? Was a lot, but 9, like defense zone. Can somebody explain? Can you explain what imbalance is? All right, I got you right now. Got you right now. All right. So let's take a look at this. Boom. We got our order block. Price came back in it. All right. So we can use our order blocks to jump into trades, and we can use our order blocks to get out of trades. Y'all ready for this part now? Drop some fire in the chat if y'all ready for this part right here. We can use the order blocks to jump into trades. We can use the order blocks to jump out of trades. Drop some fires, man. Drop some fires right now if y'all ready for this right here. All right. So we in our trade. All right, we in the trade. What's this? 1906 to 1903. All right, 1906 to 1903. So this is when Alex calls out these zones. Boom. Called out the zone, 1906, 1903. We could say we're on a 30-minute time frame. So if the 30-minute time frame closes below the zone, let's say below this previous line I have, we could say jump out the trade. All right. So this is how the team leaders are able to find the 4-hour and the 1 hour, wait for the candle to close below previous lows. If it closes below, jump out the trade. This is what they mean, right? Because this could potentially happen. Let's say this is the 30 minutes and we got 10 minutes left in the candle and price shoots here, but 10 minutes left, it closes here. It happens all the time, all right? So this is why you got to wait for the candle to close to jump out of certain trades, all right? So we're in the trade right here. We in it. And what do we see right here? What's this? On the 30. Opposing candle. Look at that big move trying to get away from it. So we jump in the trade right here, and we're able to get out the trade where? Sheesh. So now we're trading zone to zone now. I just created this zone and this zone. This is zone to zone trading. Just off your order blocks, family. It's a beautiful thing. It's a beautiful thing. We got in here and we're here waiting. Boom. Order block. Boom. Right? So when we talk about TPs, we talk about TP1s and all that good stuff. This was a real nice zone. Boom, we in there. Your TP1 could be, it's up to you how you want to take it. TP1 could be this previous floor that became a roof, right? This was a floor, boom, boom. This on the 30. Boom, 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 dancing, finally breaks it. Came to our order block, we in it. Let's say this was TP1, boom. TP1. TP2 could be previous highs now. We're targeting previous highs, all right? Previous highs, we targeting. All right. So now we're looking for previous highs. And if it breaks these previous highs, this thing's going to continue to shoot up. If price breaks these previous highs, it's going to continue to shoot up. Look at all these previous pivots and stuff up here. It's a lot more room for this price to go. I want y'all to see this. This was a downtrend. It's a lot more room for this price to shoot up. All right. Hope this makes sense, family, because I don't want to give y'all too much. I just want to show you the basic of how important order blocks could be in correlation to your, market structure and the movement of price in uptrends or downtrends. So I thought I put it in right, but I did not want that trade. I know I had done something wrong. Suggestions. What do you mean, Judith? What happened? What did you do? All right. So somebody asked about the imbalance. Let's go to the day. Let's go to the day time frame. All right. So for example, so we always supposed to buy when we see a drop? Absolutely. Absolutely, Vanessa. All right, Vanessa, imagine, let me get this out of the way. So that was our W. Y'all gonna see W's and M's all the time. Look at this, W right into a what? A M. Can't make it up, family. Nice. But imagine you missed the sell opportunity right here. All right. Day time frame. Day time frame. We had this area right here. And on the day, this was a nice little drop. This is like almost triple this previous candle. This is almost triple, all right? So let's say this was a zone right here. This is a point of interest. And I want you guys to do a lot of back testing. I didn't start finding this stuff out on my own. I had to back test, take a few L's, was impatient until I said, you know what, let me just slow down, find these zones and be patient. If it leaves me and it doesn't come to my zone, all right, cool, I ain't lose no money. I ain't tripping, all right? So point of interest on the day, we got this candle, big impulse, and look how price came back to balance itself out before it dropped. All right. So this is the importance of being patient when you have these zones. All right. Be patient when you have these zones. So we go to the 4 hour here. This is the opposing candle. And then the next couple candles, it just took off. All right. This is still the last opposing candle right here. So all I would do is just make this smaller. I just make it smaller, the zone. And be patient. Put it here, or you could respect these wicks. You could respect these wicks. Or you can have it here. All right. Price comes up there, kiss the zone perfectly on the aggressive, kissed it and dropped. So somebody asks about imbalance, right? Imbalance. So take a look at this. We're on the 4 hour. We're on the 4 hour. Let me just remove all of these. We're on the 4 hour. Let's look at 3 candles you're going to take a look at. On the 4 hour, 3 candles. 1, 2, 3. 1, 2, 3. So you see the wick right here on the first and the wick on the third. In between, you got all this body, all right? All this body. So let's say this is where price was on the 4 hour. And currently, this is where we were at in the trade. And you identify this. You go to your rectangle from the wick to the other wick. From this wick to this wick. In between is this big space that hasn't been traded back into yet. That is called your imbalance. All right. Y'all see that? This is your imbalance. For me, I have it labeled already, imbalance. Let me find it, imbalance on the 4 hour. That's what it would look like for me on the 4 hour. Now from here, we got an imbalance on the 4 hour. All right. We got an imbalance on the 4 hour. What else do I have here that I would be looking for, me personally? Rally base, rally. It's so much different things that I could identify, right? I could identify, let's say, for example, this zone right here. I could identify this zone right here. Y'all know what that is by now, right? I'm gonna put that as point of interest. Point of interest. Price came back, shot down, broke it. All right. Point of interest. A lot of action is happening right here. So let's play this out, this replay. Let's play it out. Where's the play at? Boom. Play it out. And from here, you're just looking to, if you're already in the trade, let's say something down here, you enter the trade from off something down here, which would be a nice imbalance. So imbalance to imbalance, family. We're on the 4 hour. Imbalance to imbalance. Sheesh. Imbalance to imbalance on the 4 hour. So we had this imbalance that needed to be traded back into. Price came here in the middle of the imbalance, shot up, came back all the way down at the lower tailgate of this imbalance area. This whole body right here came right back into it at the bottom, and now it's making that move. All right. So your imbalance is your point of interest. Also, your imbalance. Use your imbalance to jump into trades, jump out of trades. So what I want y'all guys to leave with is all the stuff that you're going to mark up. These are just your point of interest. A lot of times they will come into your point of interest perfectly. Sometimes it might take longer. It might take 2 days, a week, but eventually it's going to come back and have a reaction to these certain imbalances. All right. It might not happen when you want it in the next couple hours. This is why it's important to mark them up and just be patient. So for me, I'll just mark something up like this. Say price is all the way up here. I'll just mark this imbalance up and leave it like this and stretch it. And I know eventually when it comes back down and I see a yellow, I'm like, oh, that's my imbalance is coming back to it finally to trade into it and balance it out. All right. So it came back into it on the 4 hour. Let's take a look. Let's go to the 1 hour, family. Let's go to the 1 hour. Let's go to the 30. It's your lower time frames now. You're going to your lower time frames to look at entry opportunities. So whenever you see like this right here, like a gap like this could either be, all right, perfect. This is, what time is this? So 5 o'clock, you know, the market closes. The market closes 5 o'clock p.m. on the weekdays. So when it opens back up, you see these gaps. These are gaps right here. This is called the market closed and open back up. All right. When price shot down like this, we're looking for entry opportunities in the zone. So in the 30 minutes, I could be looking at this bullish engulfing candles. I'm looking for real good entry opportunities. All right. I want this to shoot up 4 hours. Let's go. Let's continue. Let's play it out. So we in it from the zone. Price is shooting, doing its thing. All right, let me pause it real quick. And then sheesh. In 4 hours, sheesh. All right, 4 hours. Look what happened in 4 hours. But right here, this is a perfect example. Price is shooting up, and we have this 3 candle setup right here. This is your evening star. All right, this is your evening star. So this is an opportunity to jump into or sell, or if you see a trade and you see this identified, you want to push up your stop loss to entry because this thing could really drag it back down once you see this reversal pattern right here. So in this reversal pattern, boom, closed. Let's take a look how many pips it shot back down before it corrected itself. From here, this was about 70 pips. All right, so from 1956, let's say 60 pips. from 1956 to 1950 was a quick correction that just happened, right? Where did it correct itself to, family? What's this? I just want to see how these imbalances and these order blocks play a big role into where price goes. All right. Y'all see this right here? Opposing candle. Boom. Opposing candle. Boom. Reversal pattern. Price comes where? Right back into the zone right here before it shoots up. All right. So this is just the importance of us identifying these order blocks. I just want to make that real clear. I hope that was real clear for this session, family. Let's see it play out. Press play. Is it finished? Sheesh. All right. So from up here, it finished the point of interest. And on the 4 hour, we have a nasty, a real nice, what's it called? Evelyn star right here. Big push, indecision, doji, selling candle. You already know you're looking to enter this trade, especially don't came to our point of interest. So up here, we already in the trade on the 4 hour. Let's go to the 1 hour. So on the 4 hour, we see it clearly right here. We can enter the trade. Let me mark this up real quick. At the end of this candle, this is called your Evelyn star. Pushing up, indecision, selling candle, Evelyn star. We can enter the trade 1964. Let's go to the 1 hour. All right, 1 hour. We up here 1 hour. Boom, price is up here now. Zone. You got a nice bearish engulfing right here. Give us the opportunity to enter the trade 20 pips previous. I just want y'all to see this with me. All right. You trade off the order block only? No, I trade off market structure. I identify order blocks. I identify imbalances, and I just mark up these points of interest. So when price comes up to these points of interest, that's what I look to enter my trade when I see reversal patterns in my point of interest. All right. So we on the 1 hour. Let's go to our 30 minutes. Top down analysis, family. Top down analysis. So the point of view, point of interest, gray rectangle is based on another order block. Yes, it was a previous order block that I found. And I have it as my gray. Yep. So now we're on the 30. We're doing top down analysis. This first one right here, this was off the 4 hour when we had a reversal pattern. This one was off the 1 hour. On the 30 minutes, you see this bearish engulfing candle on the 30 minutes. Right? So when price gets into your zone, when price gets into your zone, these lower time frames will give you more optimal entry points. All right, does that make sense? Drop a 2 in the chat if that makes sense, family. Drop a 2 in the chat. All right, so what I want you guys to do is when the team leaders call out their trade ideas, go to TradingView, mark it up, mark up the zone, and try to see what they're seeing. Try to identify what Alex is seeing. The way Alex trades is he likes to wait for the break and the retest. All right, so if he's waiting for break and retest, identify the break and the retest as he would see it, and then you mark it up. All right, I don't want to do too much more. I think we had a really nice session. I think we got to the point. AB, you ever been on an Alex chart class before, AB? Let me know. All right, yeah, so that's the main thing he does. He waits for the break and the retest. He marks up his channel. You know, he goes to the higher time frames, for example. Let's see. All right, let's say here. Let's say the day from here. So, boom, exit. All right, let's say we here. It'd be something like, I don't know. Let's say from here. That's three touches. Just giving a quick example. All right, so from this point, he'll find price moving in the channel, which pretty much means he's trapping the channel from here. 1, 2, 1 touch, second touch. This is your third touch. That's fine. If you want to make this channel higher, right? It'll be something like this, trapping the price in the channel. So this one thing he loves to do, because now he can see it's clear in an uptrend. From here, price comes back down here. And this is on the day I told you. Boom, came back down to the bottom of the channel. And what do we have here? This is your morning star. We're about to be finished, family. Appreciate y'all staying on the whole time. Morning star pattern. I want y'all to see what that looks like. This is all it is right here, family. In a downtrend, 1, this is the first push. This is the last selling candle. The middle candle is your doji that's showing indecision. And then your third candle, this is one that pops it off now. This third candle is the one that pops it off and lets you know that the buyers are coming into play. All right, these are examples. First candle, selling candle, last push. Second candle, indecision, doji, meaning they're losing steam. Third candle is when you see the buyers come into play. One more time, family. Right here, concept. This is the concept. Downtrend, boom, boom, boom. So what do we see right here in gold? If y'all identify this in gold, what y'all gonna do? This is it right here. It's in a downtrend. It's in the bottom. This is the bottom now of your zone. You create a zone, your channel. It's at the bottom of your channel. It's in an uptrend. So the bottom of your channel is already one confirmation that you're looking for a buy, right? So you're looking for your buy. Now you done identified the morning star. That's 2, right? Identify. What else can we identify? We have your, where's my EMA? We have different things you could throw on. Your EMA, all right? EMA is like a slingshot. When price comes to your EMA, we're looking for it to sling back off and push off, right? So price is coming down here. It hasn't broken. This 20 hasn't broken the 200. So these is like different confirmations that you're putting together. All right. I don't want to put too much. I don't want to confuse anybody, but these are different things you're looking for. Let me see anything else that catches my eye on the day. This is a rally. We got a little base right here. Rally. Could be different things, but I just want y'all to see that real quick. This is what Alex does. He has his channel and he still follows market structure to a T. All right. From here now, we're on the day. Let's go to the 4-hour. This is the last thing, family, I promise. All right. So remember, I tell you, break and the retest. This is this perfect market structure right here. This is perfect market structure. Look at this. Boom, boom, boom. All right. So high. Right. This is the low. All right. Price, boom, shot, broke it. Came back and retested this right here. This is the retest, looking for the entrance. Boom. Shoots down, retest. Previous lows is just being retested. That's what we're waiting for, previous lows to be retested, right? Retest previous lows. And prices continues to shoot down, right? From here, it's at the body. It's at the bottom now. It's at the bottom. We see a nice little W right here. And now we're looking for the opposite now. All right, we're looking for the opposite. What do I mean? Price is shooting, is creating new highs now. This is a high right here, right? This is the new high. New high. I want y'all to see this real clear. We got the body and we have the wick. We got the body and we got the wick. We just created a what now? What we just created right now? What did we just create right here? You just created a zone, family. We just created a zone. We just created a zone based off this body, which is the high, the body, but also we got to respect the wick. Boom. So when price breaks this now, price broke it and closed above. This is where price broke it. Boom. closed above. News happened, but look where news brought it to. Where did news bring price to? To retest this. News brought price to retest this. Y'all see this? Drop some fire in the chat if y'all see this makes sense. Drop some fire in the chat if y'all see this and this makes sense. News just brought price right back into our previous zone right here. That was broken, came back and retest. Broke it, came back and retest. Like when price happens, when movement of price and news is going to push price to certain zones and areas. That's what news is going to push it. So when you see Alex said, hey, news is happening. When news happens, hey, we're going to look for a buy at 904 to 902. But it's still aggressive play because news. But this is the zone I'm looking for. Why? Because price broke the zone, and it never came back to retest it. When it broke it right here, it never came back to retest it. All right. Now we're going to put all kinds of things to it now. Let's put some other things to it. This is a what? A nice imbalance. This right here is a nice imbalance. So we're going to put different confirmations to this. Imbalance. News came and pushed this thing right back down here. So we got 1, 2, we got different things in the same location, all right? But yeah, I'm going to stop it right there, family. I'm going to stop it right there. You can mute yourself if you want to chop it up. If you have any questions real quick, you can mute yourself. This was a nice session, nice, clean. Love all the questions. Love the participation, family. You DM me, Carla? All right, I'll check in a second. I'll check and I'll hit you back. Everybody's good. So I want to make sure you guys are taking these trades, but more than that, make sure you guys are marking up your charts. Mark up your charts. Mark up those order blocks. Make mistakes. It's okay. It's all right. You know what I mean? I've been doing this now, coming up on what, 2.5 years with OBG. I made a lot of mistakes. I'm not even tripping about it. I made a lot of mistakes. But guess what? I got better from putting those reps in. The more reps I put in, I got more comfortable. I'm like, oh, okay. Why the hell was I looking at that zone when I got this order block right here, or I got this break or this imbalance right here lower, and I'm looking to enter the trade right here? If I was a little bit more patient, I could have entered when it came back into this imbalance because it got to balance itself out. Little stuff like that. It's just about patience now at this point. And when y'all start making money, trust me, I'm not going to be rushing into trades when y'all making money. Your account is growing. You don't grow your account 2,000 in a week. You're not just trying to jump into any trade and blow that money. You're going to be waiting for those right trades because your account is growing. You're confident now. You see where this could go. But when we start brand new, those are the people that's trying to jump into every trade and they don't have the concept down pat yet. This is a patient game. It's a marathon, not a sprint, family. Trust me, it's a marathon, not a sprint. All right. So it was a great session. I'll see you guys on the next call. If you have any questions, y'all can hit me up. All right. You have a good one, family.